On the show today, Nigeria's economy grows, but at a slower pace of 2.01% in the first quarter of 2019. Zimbabwe Central Bank secures $500 million to ease dollar shortages. Plus, Saudi Arabia deposits $250 million into Sudan's Central Bank. Thank you for joining us and welcome to Business Incorporated. I'm Chimezi Obi Iwagu. Well, we'll begin here in Nigeria as the economy grows by 2.01% in the first quarter of 2019, but slightly slower than 2.38% recorded in the fourth quarter of 2018. Data from the National Bureau of Statistics released today shows that aggregate GDP stood at 31.794 trillion naira in nominal terms, driven mainly by information and communication technology, agriculture, transportation and storage, trade and construction. In real terms, the non-oil sector contributed 90.86% to the nation's GDP at 2.47%, while the oil sector contributed 9.14% to total real GDP at minus 2.47%. In the first quarter of 2019, agriculture GDP grew 3.17% from 2.46% in the fourth quarter of 2018. Manufacturing GDP was sluggish at 0.81% in the quarter under review versus 2.35% the previous quarter. And to the markets now, investor sentiments were mostly negative across major markets in Africa at intraday, except at Nigeria, where the NSE index here in Nigeria was up 1.81%. The JSE index in South Africa and Egypt's EGX30 were both in red territory, down 1% and 1.04% each. Kenya closed negative on Friday. And in the Gulf region, major bourses there were also negative at intraday, except Qatar index, which was up 0.25%. Saudi Arabia's index was down 1.58%. Meanwhile, Abu Dhabi's index was unchanged at intraday, while Dubai was down 0.25%. And European markets traded mixed in the morning as investors digested geopolitical developments and corporate earnings. Well, for details, let's talk to Lars Alter from the floor of the Frankfurt Stock Exchange. Hello, Lars. Good afternoon. A beautiful week to you. It's a wet day today in Lagos anyway.
Can you come again? I didn't hear you.
Well, just extending my greetings to you. Good afternoon. Anyway,
okay,
President...
I can hear you now. Hello to you.
All right. President Donald Trump has issued a new threat to Tehran, tweeting that conflict in the Middle East will be the official end of Iran, while Saudi Arabia warned it stood ready to respond with all strength. How is the market reacting to this geopolitical development?
Well, as a matter of fact, the market is reacting rather calmly to that. As you can see behind me, of course, the shares are down across the board, but that does not necessarily have a lot to do with this particular threat by President Trump against Iran. It has more to do with the trade war that is ongoing and where Google is now getting involved, complying with President Trump's ban on Huawei. So this is something the market, if you talk to people here in Frankfurt, seems to be more concerned with, and that is quite interesting considering that what we are hearing from the American president right now very much sounds like a threat of an all-out war, and that of course would be a great problem for the entire world and specifically for markets too, of course. What we are seeing today is a little bit of a reaction. Oil price, of course, as you would imagine, is up. But again, markets are relatively calm considering that the saber rattling here continues at such a volume.
And in the corporate space, Deutsche Bank is under fire again. A report says the bank was warned of suspicious activity on accounts for U.S. President Donald Trump and his son-in-law. What exactly happened there?
Yeah, it's interesting. Several headlines now, as we see, involving President Trump here. Deutsche Bank, of course, the biggest German lender here, has for years been the only major bank doing business with the U.S. president, even going back to his times as a real estate developer. Deutsche Bank has come to regret that many times over, as he has not necessarily proven to be a great customer. He has even occasionally sued Deutsche Bank over terms he had previously agreed on. But now here's just another chapter in this endless saga between Deutsche Bank and Donald Trump. Deutsche Bank apparently internally got information from their own experts on money laundering that several accounts that they ran for both President Trump as well as Jared Kushner, his son-in-law, had suspicious activity on them that should have technically been reported to authorities, specifically to a unit in the Treasury Department that investigates financial crimes. Now, it is absolutely not clear whether anything illegal has occurred here. This is merely suspicious activity. But it is interesting that the software that Deutsche Bank has in place actually flagged those transactions, and that top brass at Deutsche Bank failed to investigate and did not comply with their own rules. So it looks a little bit to some people like a potential cover-up, and that, of course, has some feathers ruffled here.
Now, Lars, do you think this will probably have some consequences at this week's Deutsche Bank shareholder meeting?
Well, usually we don't see much at Deutsche Bank having real consequences. For years, unfortunately, the bank has been in steep decline. And this, of course, is just another thing that will be discussed in a few days. On Thursday, we will have this meeting. And the mood is already, of course, bad at Deutsche Bank investors. And their anger, interestingly enough, is not directed at Christian Sewing, the CEO of Deutsche Bank. But he's, of course, only been at the helm of Deutsche Bank for under a year. But more than that, investors are angry at Paul Achleitner, who is the chairman of the advisory board and the supervisory board. And they want his ouster after about 6 years in office, doing his reign at Deutsche Bank. Share price is down almost 70%. And of course, the bank today stands in a really bad shape. It's a shadow of its former self. Financials are really weak, compared especially to global competitors. And so there are ideas on the table here to oust Paul Achleitner on Thursday. That would certainly be a big chapter in Deutsche Bank's history. But seriously, nobody is expecting that really to happen. These things come up because people are angry, but it just seems nothing will ever change at Deutsche Bank.
Right, Lars. Well, the week has just started. Let's continue to monitor those developments. Enjoy the rest of the day. In the UK, the indices were in the red in the morning trading as investors across major markets monitor geopolitical risks after President Donald Trump issued a new threat to Tehran, tweeting that conflict in the Middle East would be the official end of Iran, while Saudi Arabia warned it stood ready to respond with all strength. Meanwhile, Google has barred the world's second biggest smartphone maker, Huawei, from some updates to the Android operating system, dealing a blow to the Chinese company. Well, let's see how these topics and more are moving markets in the UK. Let's cross over now to our London studios for the London Market Report with my colleague Simon Pusey. Hello, Simon. Good morning. Good afternoon. Good to see you.
Afternoon, yes, thank you very much. After briefly resisting the global trend this morning, the FTSE has moved firmly into the red. I think we can show you some numbers. Everything down today. A lot of it is due to the poor figures from airlines and a sharp drop in shares for travel companies, but also house prices here in the UK. Some areas prices have increased, but in London, the average asking price in May was down 2.5% from a year earlier. So that's all contributing to what we see in these figures. The FTSE all share is at 3,996. That's down 0.72%. The FTSE 100 also down by 0.7% at 7,927. Meanwhile, the FTSE 250 is down 0.69%. Let's take a look at the currencies, and the pound is looking better. All plus points here. The pound is up against the dollar by 0.2% at 1.27. It's also up against the euro by 0.23%, and it's up very slightly on the yen by 0.14%.
Now, the British Prime Minister Theresa May said she will present a new bold offer to lawmakers with an improved package of measures in a final attempt to get her Brexit deal through Parliament before leaving office. Is the market biting into this political development?
Yeah, it's interesting, actually. We've had lots of Brexit developments, both to and for the last few weeks and months. Britain has actually had the most stable stock market in the world over the past 3 years, despite all of those fears surrounding Brexit. The MSCI, United Kingdom All Cap Index, which includes almost all stocks listed in Britain, has been the least volatile of any stock market index in the world since 2016. That's according to research from Tilney, the wealth advisor. But obviously, Brexit is the talking point, and I think what most analysts fear is no deal. No deal throws up many questions in pretty much every area of life, and that's what will worry the markets. So if Theresa May can get some kind of deal, then that will help. In this third vote, the markets will be loving that, and I think we'll see a huge boom in the markets if there is a deal. But the opposite is true, is if we head towards no deal. It means that a lot of people are worried about a certain Boris Johnson getting the top job, the hardline Brexiteer that he is. He is thought to potentially favour no deal, so lots of people will be watching that over the next few weeks.
Well, Simon, is a new week. What is the outlook? And are there company news to watch today and the rest of the week?
Yeah, two big companies really looking at this week. Lots of eyes on the food delivery platform Just Eat. Analysts think it could be knocked out of the FTSE 100. That's the list of the biggest 100 companies in the UK. It's after their share price dropped by 7% on news that their rival Deliveroo had received investment from a certain company called Amazon. There are also fears for the travel company Thomas Cook. Its share price fell sharply at the end of last week, and it dropped a further 16% today to just 10 pence. It's largely due to the fact that analysts at Citigroup said the travel firm's shares were worthless last week. That came a day after the company issued its third profit warning in less than a year and reported a 1.5 billion half-year loss. So people, especially those who have booked holidays with Thomas Cook, will certainly be watching that one.
All right, let's keep an eye on those companies. We'll talk more about them as the week runs by. Thank you for your time. And stocks in Asia were mixed today amid a series of geopolitical developments across the region. The Nikkei 225 in Japan added 0.24% to close at 21,301.73. The Topix also edged up fractionally to finish its trading day at 1,554.92. The move came after Japan's economic growth in the first quarter rose above expectations. In South Korea, the Kospi closed flat at 2,055.71. The ASX 200 in Australia rose 1.74%. In mainland China, however, shares ended the trading day lower. The Shanghai Composite slipped 0.41% and the Shenzhen Composite fell 0.74%. Hong Kong's Hang Seng Index slipped more than 0.5% as of its final hour of trading. And U.S. stock index futures were slightly lower as concerns about an intensifying fallout from a U.S. crackdown on Huawei weighed on market sentiment. At around 6:15 a.m. Eastern Time, Dow futures indicated a drop of more than 60 points at the open. Futures on the S&P and Nasdaq were both seen slightly lower. Last week, President Donald Trump's administration added Chinese telecom company Huawei to a trade blacklist. The announcement prompted Alphabet's Google to suspend business with Huawei that involves the transfer of hardware, software, and key technical services. It means Huawei can no longer license Google's proprietary Android operating system and other services that it offers. Instead, Huawei is now only able to use a public version of Google's operating system through the Android open source project. The intensifying trade war between the world's two largest economies continued to keep financial markets on edge. However, a U.S. decision to remove tariffs on Canadian and Mexican steel and aluminium provided some relief for investors. In corporate news, Pinduoduo, Game Technology, and Cordian are among some of the companies scheduled to report their latest quarterly figures before the bell. No major economic data reports were expected today. And away from the equities market, and as central banks in sub-Saharan Africa's largest economies meet this week and next week, economic analysts say they could start diverging on policy when they make interest rate calls in the next 2 weeks after oil prices pushed up inflation. Since the Monetary Policy Committees last met, inflation in Ghana and Kenya accelerated, and analysts flagged the South African economy probably contracted in the first quarter. The Nigerian Central Bank begins its meeting today. Analysts say the Central Bank of Nigeria and the South African Reserve Bank have both turned more dovish since the start of the year and so expect both to hold rate. According to them, Ghana looks more likely to cut despite inflation ticking up in April. The Bank of Zambia will be the one to watch as to whether it will switch to a more active support of the weakening kwacha. Zambia is also subject to dry regional weather conditions pushing up food prices, which is likely to see East African central banks hiking rates going forward. When we come back after break, we'll look at the latest on the global oil market, plus an update from the equities market. Just stay with us.